Let's see how many auctions are planned for this weekend. In New South Wales, 625 auctions are scheduled, down 38% from the same time last year. Victoria is also down year on year with 764 auctions scheduled. Queensland, you should expect more than 200 auctions. 114 of them are out in the regions. South Australia heading into the weekend with 53 auctions in the diary, down 67% for the year. Both Tasmania and the NT have 2 and 6 auctions scheduled respectively, while ACT auction numbers are down as well. There are 85 planned for the weekend. The most viewed auctions this week all come from Victoria. 178 Munya Road, Carnegie in Victoria has 3 bedrooms and 2 bathrooms. 1 Richardson Street in Victoria balances period charm with modern updates featuring 2 double bedrooms with built-in robes. This charming 1930s solid brick family home at 35 Glindon Road in Camberwell, Victoria, boasts 4 bedrooms and 2 bathrooms. 24 Odessa Street at St Kilda in Melbourne is known as the Lemon Tree Home, with charming period details and high ceilings. And at the top of the list for most viewed auctions this week was 8/7 Keith Court at Brighton in Victoria. It's a mansion-style 2-bedroom apartment ready for transformation. The most viewed residential listing is an exception to the Victoria property streak. 12 Corella Avenue at Samford Valley in Queensland. This family home offers vast entertaining options that flow seamlessly to the garden. The home's got 5 bedrooms, 3 bathrooms and space to park 8 cars. Has a large kitchen, lounge room, games room and separate chef's kitchen area for large-scale entertaining. Property's located northwest of Brisbane. It's a peaceful rural setting on 6,000 square metres of land with huge lawns, 12.5 metre saltwater pool, a half-size basketball court and a massive shed. The home's open for inspection tomorrow at 10:30 a.m. For more on the property market, I caught up with Eleanor, Creagh, Senior Economist at REA Group, a little earlier and started by asking her about this weekend's auctions.
So, I mean, no surprises really. We know we've got long weekends and we've probably got a few vendors looking to hold back on selling their property until school holidays are over and the like, and we're out of this period with all the long weekends. So auction activity is a little bit subdued, but we are expecting a bit of a bounce back next week. And we have seen that clearance rates have held relatively firm. Clearance rates still hovering around the highest levels they've been in about a year with, I guess, confidence ticking up a little bit with the Reserve Bank pausing their rate hiking cycle and property prices starting the year on a stronger footing.
Yeah, property prices are on the way back up again. So are we at the end of that downturn we've seen in the property price cycle over the past 18 odd months or so?
Look, it certainly looks like we're in the midst of that bottoming process. And I think we've reached a point where, I mean, even if we get one more rate rise from the Reserve Bank in May, we know that the end of interest rate tightening is in sight. So that means that buyers and sellers can move forward with their property decisions with a little bit more certainty than they've had over the past 12 months or so. And I think that is seeing confidence pick up a little bit. We've also got incredibly tight rental markets and a very strong rebound in immigration as well. And that still very constrained listings environment, which is all those factors together are really underpinning prices at the moment and keeping a floor under values. So we expect to continue to see property values stabilising. School
holidays finishing soon. What's the sort of point in the year where the amount of stock on the market really picks up again? What's winter like for the property market?
So it's typically a little bit quieter. So we are kind of approaching that seasonally quieter period. But then following that, we've got the spring selling season coming up, which is typically the period when we see an uptick in vendors bringing their properties to market.
PropTrack, you've got some data out showing the suburbs where prices have gone up more than 300% in the past decade. So what parts of Australia are we talking about here?
Yes, some really staggering price growth. I mean, it's been an exceptional or a really unique 10-year period for the Australian property market. We've seen that nationally home prices are up 83%.
Yeah, we've got a little graphic here on the screen here. I mean, you can see Byron Bay up 361%. Bright, Victoria, 256. These all look like kind of coastal areas. So what is that? Are those really in demand at the moment with buyers?
Yeah, so I mean, when we look at that top 10 list, you can see that a lot of those suburbs are perennially popular, right? Byron Bay, a 360% price increase over the past decade.
Correct.
Median value of homes in Byron Bay now at that $3 million mark, up from $650,000 10 years ago. I mean, a lot of these towns are holiday destinations, they're coastal towns, and don't forget they were also bolstered during the pandemic period by increased adoption of remote working trends, people being able to live further afield and looking for that lifestyle shift.
No inner Sydney or Melbourne CBD areas on the list. Is that a surprise or not really?
Not in the top 10 list.
Yeah, okay.
I mean, we have seen, I think, a lot of these places are places that really were bolstered by the extraordinary price growth that we saw throughout the pandemic period. So people looking for larger homes, bigger block sizes, coastal destinations and picturesque regional locations. We've got Berry in there, Bright in Victoria as well.
And what about the rental market itself? Like, how quickly are properties being leased at the moment?
So the rental market remains incredibly challenging for would-be tenants and renters at the moment. And we're seeing that rental days on site, so the number of days before a property is rented after it's listed, has ticked back down to a record low level that we saw in November last year as well, just 18 days.
Wow, so less than 3 weeks.
Less than 3 weeks. Now, Perth and Adelaide, which have the tightest rental markets in the country at the moment, are where properties are renting fastest. But it's Sydney and Melbourne that have seen the biggest fall in rental days on site over the past year.
So still massive amount of demand for rental properties across the country.
Certainly, and I mean, it's not so surprising when you look at the incredible rebound that we've seen so far in net migration. We know that the overseas arrivals data points to that rebound in net migration, which was at a record level in the September quarter, has really continued into this year. And we know that there just simply aren't enough rental properties out there. So the supply of available rental properties is incredibly constrained at the moment, particularly with people shifting towards smaller household sizes, investors selling up over the past couple of years and being less active in the market than they were, say, a few years back. And that combination of factors really means that there just simply isn't enough rental supply and demand is far outstripping the rental supply that is available.
And I guess at the same time, the construction sector, building new properties, building new apartment blocks, seems to be running at a slower pace than normal.
Yeah, and I mean, that's the unfortunate challenge, right, is it doesn't look like these tough conditions for renters are really going to be easing up anytime soon. We know that apartment approvals are down 46% year on year. We are seeing a slowdown in construction of particularly high-rise apartments. And of course, that means that dwelling supply is going to continue to be constrained. So the supply of new available rentals coming to the market over the next few years or so is going to remain challenged. So nothing meaningful to really provide a release valve for renters at the moment. We know investor activity isn't quite where it needs to be to bring new rental supply to the market. So unfortunately, we're probably going to continue to see rental price increases and tough conditions remaining for renters.
Looking ahead to next year, potentially the cash rate going down, would that have any impact on the rental market at all? Would it potentially ease things up a bit with lower interest rates?
So we know that moves in interest rates don't really have a direct impact on rental prices. But I guess if we were to approach a situation next year where potentially we do see the cash rate coming down, what we'd really want to be looking at in terms of easing these tough conditions for renters is an increased supply of available rentals. So that could come through increased investment in the property market. So from both small and large scale investors, say via the build to rent sector or smaller, mum and dad investors being more active in the market. But it's not just interest rates that are deterring investment in the property market at the moment.